Is it not in the most absolute simplicity that real genius plies its pinions the most wonderfully? E.T.A. Hoffmann. Yes, the answer is yes. Absolute simplicity is what we look for, and it is wonderful when we see it working, and that's almost on a daily basis here at chartingwealth.com. As we slowly meander our way out of the crappy summertime trading zone through the transition zone and into the fall-winter trading zone, which is what we live for, we see things again following the example of the weekly vertical crossover. It is our strongest trend. It is the thing that we look for time and time again, and we see it again manifesting itself over and over and over, and it is wonderful to see. We see all of our charts heading in the directions of the weekly vertical crossovers. And again, yes, markets are roiling. Yes, the world is screwed up. Yes, a market crash is coming. 3 bubbles will be popping. That'll be the housing bubble, that'll be the stock market bubble, and that will be the bond bubble. And we can thank the central bankers for that, for very, very low, historically ridiculously low interest rates, inverted yield curves on bonds, and negative interest rates in Europe, which is completely insane. But again, when your economies aren't working and the central banks can do whatever they want, they do crazy, crazy things. Quantitative easing, more of that is on the way, my friends. They can't get off the equivalent of crack cocaine, and I'm afraid we're going to be the ones, the body politic, that in the end suffers the most. But we're here to keep you from being the sheep led to the slaughter. We want to turn you into wolves. We're not just going to survive the coming catastrophe, we are going to thrive. And to that end, we have a 3-month training we're going to be offering here, finishing touches on that, and I just can't wait to make that offering to you. Of course, we also have a great training in bonds. As soon as we get a couple of things launched, we're going to launch that training out to all the subscribers. Go to chartingwealth.com, sign up. You will be on the list. You will receive it. And we've just got so many great things planned for you as we get out of this crappy time of year, get into the fall-winter trading zone, get trained up and ready for success. This is the most important time for you to be tuning in on a daily basis. You need what we teach every single day. You need all of the trainings that we are offering. I particularly recommend the liquidity training, and the one we have today in the show notes for subscribers, and that's free at chartingwealth.com, is backing away to see the real picture. It's a special video we have for you on that. Want you to listen to that after you finish, of course, this daily review. I want you to study that. And again, best thing to do, folks, is to sit down. If you're listening to the trainings that we do, get your little trader notebook out and write down the lessons that you learned from these things. Writing things down, taking notes, having a journal. Those things are so important. Filling out your daily market worksheet, weekly market worksheet, trade worksheet. All those are available for free in the show notes. Don't forget, if you want to help us, buy the book, Charting Your Way to Wealth, 12th edition. Now available, 12th printing rather, not 12th edition. We're still in the first edition, 12th printing. We had an autographed copy for you. And of course, appreciate all the new Patreon members, and they're getting all the extra special trainings, plus the short chart training, the Bitcoin training, plus the Bitcoin chart, and all the other great, the quarterly training, all the great stuff. And just put out a really super training just for them on something super special, and that is how to go through any chart, figure out if it is tradable and trackable, and then how to use the appropriate time frames in order to do that, whether it's a stock, it's an ETF, whatever it might be. I want you to have that training too available for Patreon members. Follow the link in the show notes if you want to be a Patreon supporter, and depending on your level, you get a free book. So again, thanks so much, folks. Let's jump into these charts. Great news to bring to you today. Stocks are down. Both the S&P 500 and the NASDAQ 100 going in the direction they're supposed to be going in. We see that we have a red down candle forming for the week. Still don't have a wick as long as these 3 prior weeks. Hopefully that's going to keep going down. Now you might say, who wants the market to go down? When you have a weekly vertical crossover going down, that's exactly the direction we want it to go down. We have a great training on inverse funds, how to make money when markets crash. What's that all about? Things like, if you see the S&P 500 heading down, did you know that there's an inverse fund that mimics the reverse? It's called the ProShares Short. There's others, the ProShares Short S&P 500. And look, bingo, it goes up when the S&P goes down. Now, isn't that interesting? Yes, there are ways to do things that make sense, and it tries to mimic percentage for percentage. It's not the same dollar amount, but it is percentage-wise. So if you're doing a practice trade of $100,000 worth of the inverse of the S&P, you could buy SH, and it should move up the same corresponding percentage, hence the same dollar amounts if you're buying the same dollar's worth. So again, that's what they attempt to do. So again, practice trade it. Or you can just keep up with how much the S&P 500 goes down, and then you'll know percentage-wise what you would have garnered. So that's what we are looking at. And again, we'll continue to monitor all of this. The derivative oscillator gaining downward momentum, price percent oscillator heading down. We go to the 2-day chart. And again, we see that on our 2-day chart, we have finished drawing this latest candle. It, of course, represents Monday and Tuesday. It is the body of the candle is lower than the prior candle. The wick, however, is not, so it's not bottomed out as low as many of these prior candles have, but we're hoping that'll keep going. Price percent oscillator heading down, derivative oscillator losing downward momentum. Go to that 4-hour chart. Saw the market up a little in the morning and then drop down. In the afternoon, we see that the price percent oscillator is heading down on that 4-hour chart. Derivative oscillator lost a little bit of downward momentum because of that pop-up in the morning. Price is well below the 2-day. And the weekly trend lines going in our direction, just what we wanted to see. We're going to go from the S&P 500 to QQQ. And guess what? We have with the Qs, the NASDAQ 100, the tech stocks. We, of course, have a weekly vertical crossover in effect going all the way back to Friday the 9th of August. Remember, all weekly vertical crossovers occur on a Friday. And we see prices moving down 0.21% for the day. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. Looking somewhat similar to the S&P. We see that the latest 2-day candle's a down candle again. The wick on the bottom not reaching as far down as it had on some of these previous candles. Derivative oscillator losing downward momentum. Price percent oscillator heading down. We go to that 4-hour chart. Same kind of thing. Bump up in the morning. Roll back in the afternoon. We have not quite a doji, but a spinning top indecision tending down. Price percent oscillator still heading down. And the derivative oscillator losing downward momentum. So again, stocks going in the direction we want them to go in. Would like to see some acceleration in those down moves. But it's nice to see them heading in the correct direction as per the weekly vertical crossover. Remember, my friends, since we have a little sophistication to our trading, we don't have to market go up in order to make money. We just have to have the market move in the direction that we're expecting it to, based upon our weekly vertical crossovers, and that is what we are seeing. So let's keep moving through these charts. The good news is we also see 20-year bonds up 1.54%, slamming up for the day. Higher highs as they reached yesterday. Price above the weekly trend line. Price percent oscillator heading up about the same angle it had the prior week. Derivative oscillator gaining upward momentum, looking quite nice. 2-day chart continuing to move up. Is it reaching higher highs? Let's see, 147.72, 148.60, so hasn't reached that yet on the latest 2-day candle, but moving up, which is nice. Derivative oscillator still losing momentum. That is because we reached the highest high back on the 15th of August, and that is why the derivative oscillator's not gaining momentum at this point. We haven't had that momentum change. We had 6 days of sideways sliding and down movement, well, movement tending down. This is the first 2-day candle we've had of actual up movement since the peak back on the 2-day candle ending Thursday, the 15th of August. Derivative oscillator is, like we said, losing momentum. Price percent oscillator is heading up. We go to that 4-hour chart. Looks like it's trying to cross over going up. That is nice to see. And again, we had a nice afternoon on Friday and morning on Monday of up movement. And then, of course, Tuesday morning and afternoon. Quite nice. Looks like we're getting close to a crossover on that 4-hour chart going up. So things are looking nice for bonds. Things moving in the direction we want them to, because we have a weekly vertical crossover going up in effect. How about gold? Gold up nicely. We had that crossover in gold all the way back on the 7th of July. Check that out. 7th of, forgive me, 7th of June. So again, gold crossed over then, and but for 2 weeks of some minor slowing, we have seen gold climb. That weekly vertical crossover at the end of the day, the jumping in point, 125.46. And of course, how high has it reached? Check it out, 145.68. Wow, that is incredible. Just since early June, gold just continues to move up. Of course, gold has reached the highest highs that economies have seen around the world, 71 of them against their own currency. Why? Because their currencies have devalued that significantly when compared to gold. Now, there is some supply and demand driving some gold price, but also a lot of devaluation that is driving gold a standard up in these countries. So we see the price percent oscillator heading up. Derivative oscillator looks like it's gained a little bit of momentum so far in the week. 2-day chart heading up. Higher highs on this latest 2-day candle. Price above the 2-day and well above the weekly. Derivative oscillator still losing momentum on that 2-day chart. 4-hour chart. Remember, we had that crossover on Monday morning. And of course, the afternoon, let's see, the end of Monday, the last 144.46, and of course up to a high of 145.68 in just a day and a half. So quite nice. Anyway, gold continues to move up. 4-hour chart continues to move up, of course, in the direction of that weekly vertical crossover all the way back in June. Folks, this is the beauty of what we try to bring to you each and every day. Does it work every single time? Of course not. Nothing does. We can't control the future, but we can study the past in order to portend what's going to happen in the future. The formulas, the mathematical displays you see in these indicators are so helpful. You want to learn more about what we do? You got to be with us every day. 10 to 15 minutes is all we ask. And if you want to be a master of the charts, 10 to 15 minutes every day, day in and day out. If you don't have time for that, then you're not serious and you don't need to be with us. You can go to one of these get-rich-quick channels and see what they can do for you. But again, there's a whole lot of fluff in get-rich-quick. Our plan is, of course, to get rich, but it's not going to be quick. It's going to be over time. It's going to be smart. And again, those opportunities are going to present themselves when all three, the stock market, bond market, and real estate market bubbles pop. They're going to be millionaires and billionaires made, and others turned into dust. We want you not to be a sheep waiting to get consumed, but we want you to be a wolf. And to that end, be with us every day and get ready to sign up for and take the special accelerated market mastery course we're going to be offering. It is going to be everything you hoped for and more. It's going to be technical analysis, which is, of course, charting. It's going to be options, everything you need to know, even if you just have a tiny amount of money to start, how to actually use options to magnify and grow your wealth, and then how to create and manage your own private wealth fund using our printing press methods, using options, and using covered calls, any number of things to take that money and push down your basis in what you own to zero and just print, print, print. That's what we're going to be teaching. My friends, if you don't have our book, that's the first way to start. Buy it. It's available. Follow the link in the show notes. If you live overseas, for some reason, SquareUp won't allow you to use your foreign credit card. I don't know why. If you will email me, cw@chartingwealth.com, I'll send you a PayPal invoice. Pay that. I'll send your book to you wherever you are in the world. And if you want to be a Patreon member, follow the link in the show notes to Patreon membership. I'll immediately get out to you all the bag of goodies we have for you. And don't forget, believe it's next week, I'll be sending the emails out to our Patreon supporters. We're going to have that live monthly call-in, our question and answer session for all of our Patreon members, even the brand new ones. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.